All right, so read this book called The Little Book of Common Sense Investing by John Bogle, who apparently is the father of the mutual fund. I thought it was a good book, one of a few financial, personal finance type books I'm getting through. Um, he emphasizes getting your fair share of the market's total returns, essentially. He talks about low cost index fund investing, buying and holding for the long term. As you know, index is basically, it takes a little piece of the pie of whatever that index is tracking. So if you buy the S&P or index fund that tracks the S&P, then you're investing a little bit in each of those S&P companies across the board. And the reason he emphasizes that is because it's a surefire way to get your fair share of the market's returns versus people who do like individual stock investing, because obviously you're not as diversified as you would be in an index fund. He talks about low cost funds. There are a lot of mutual funds out there that are actively managed, and those can have high fees, commissions, and whatnot, and also which also make it less tax efficient. So he really emphasizes just buying the indexes and holding those for the long term. Um, and he talks about this same kind of idea. Really, the book is just this really one idea. He's trying to get you to invest and just invest in index funds for the long term. But he goes through a lot of different options and ideas to arrive back at that same kind of result. So he talks about ETFs. He talks about taxes. He talks about bonds. He talks about asset allocation. But at the end of the day, the whole point is that you almost can't lose if you just go with the index funds and stick with those for the long term. So, um, yeah, I like the book. I do a little bit of individual stock investing, but I guess it's shifting my philosophy a little bit, and maybe I just need to go with the index, because again, you don't have to like watch it, you don't have to follow companies and businesses, so it really is the best way to set and forget it, and try to avoid those mutual funds that end up costing you a fortune by means of the expenses. So yeah, good book, I recommend it.